5 top financial stocks in the market right now that could provide lucrative long-term investment opportunities for your portfolio. First up, we've got American Express, ticker symbol AXP. Now, this isn't just any financial company. We're talking about a business with roots stretching all the way back to 1850. That's over 170 years of experience navigating the ups and the downs of the financial world. Today, American Express stands tall with a market cap of $176.13 billion, making it the 76th most valuable company globally. And get this, it's already up 33% this year. Talk about starting the year with a bang. Let's break down its stock performance. From March 2020 to February 2022, we saw a strong bullish move of 198%. That's our phase 1. Identifying a stock with a proven performance history. Then from February 2022 to December 2023, we had our phase 2, a period of consolidation. January 2024 marked our phase 3 with a breakout from the consolidation zone. And now we're in phase 4. The stock has climbed 25% since the start of the year following that breakout. So when should you consider buying American Express? Well, the stock is close to breaking out and setting new all-time highs. That's going to be your sweet spot. Looking at the daily chart, it's been wrestling with that $250 mark. But here's the thing, it keeps testing that level and sooner or later it's likely to break through. When it does, we could see a move towards $300 and then every $50 after that. Keep your eye on that $500 mark. Breaking through that could signal a major move towards $1,000 in the long term. The analysis method I have just used is called the 4-phase sequence method, or the 4PS method for short. It's a systematic approach we created to identify and catch potentially profitable stock investment at the start of their uptrend. It breaks down into 4 crucial phases. Phase 1, identify a stock with a proven performance history. Phase 2, wait for a prolonged consolidation or base to form. Phase 3, confirm the breakout from that base. And phase 4, enter the stock at the start of the next major uptrend. Let's apply this method to the next stock, which is JP Morgan Chase, ticker JPM. This is a true titan in the banking world. We're looking at a market cap of $616.34 billion, making it the 13th most valuable company globally. It's not just the largest bank in the US, it's the largest bank in the world by market cap as of 2023. That's some serious financial muscle. Now, JP Morgan Chase is a bit trickier to apply our 4PS method to because it has a mixed performance history. The last clean trend we saw was from February 2016 to February 2018 with a 128% increase. Since then, it's continued to push up by 82%, creating higher highs, but with some deep declines along the way. The most recent trend started in January 2024 when it broke out from a 26-month consolidation between October 2021 and December 2023. Currently, this trend has climbed to 26% to its all-time high set in July. Now, when should you consider buying JP Morgan Chase? The stock has recovered from a 12% decline in August and is close to breaking out and setting new all-time highs. A breakout here could signal buying opportunities. We're looking at potential move towards $250 and then every $50 after that, with $500 being a reasonable long-term target. Keep in mind though, that past performance doesn't guarantee future results, so always do your due diligence. Okay, moving on to MasterCard, ticker MA. This is another financial heavyweight with a market cap of $433.11 billion, making it the 20th most valuable company in the world. Just to give you an idea of its reach, 35 million companies globally have contracts to accept MasterCard. That's some serious market penetration. Okay, applying our 4PS method to MasterCard, we see a phase 1 from October 2016 to April 2021 with a massive 293% increase. That's the kind of historical performance we love to see. Phase 2 was from April 2021 to July 2023, a period of consolidation that tested the patience of many investors. August 2023 marked our phase 3 breakout, and since then we've seen a 14% climb in phase 4. When should you consider buying MasterCard? Looking at the daily chart, since the all-time high in March, MasterCard has been trading inside a phase 2 consolidation. Given the length of this consolidation, patience is key. We're waiting for a breakout and record highs before taking a position. Keep an eye on that $500 mark. Breaking through could signal the next leg up towards $1,000 per share over the long term. Remember, in investing, sometimes the hardest thing to do is wait, but often it's the most rewarding. Okay, next up is Progressive, ticker PGR. With a market cap of $140.72 billion, it's the 103rd most valuable company globally. Founded in 1937, Progressive has a long history in the insurance industry. And as of 2022, it became the largest motor insurance carrier in the US. That's a pretty impressive achievement in a highly competitive field. Looking at Progressive through our 4PS lens, we see a phase 1 from December 2016 to April 2023 with a 204% increase. That's a solid long-term uptrend that caught the eye of many investors. Phase 2 was from April 2023 to September 2023, a relatively short consolidation period. Phase 3 occurred in October 2023, and since the bull trend started in Phase 4, we've seen a climb of 60%. That's the kind of momentum we like to see in a good stock. Now, when to buy Progressive? This stock broke out of a 3-month consolidation in August and is setting record highs. We've held positions in this stock since last year and are now looking to add further positions on the next setup. We're waiting for a pullback and then the next breakout, with a view to this stock moving towards $500 at $100 increments. This strategy of adding to winning positions, also known as compounding, is a powerful way to maximize gains while managing risk. Last, but certainly not least, we have Berkshire Hathaway, ticker BRK. This is Warren Buffett's company, and when the Oracle of Omaha is involved, you know it's worth paying attention. Only this week, Berkshire Hathaway became the first non-tech company to reach $1 trillion market cap, making it the 8th most valuable company in the world. Quite an achievement. It's a holding company whose conglomerate includes over 80 companies spanning a wide range of businesses, from insurance and reinsurance to rail freight, energy supply, and more. Applying our 4PS method to Berkshire Hathaway, we see a phase 1 from March 2020 to March 2022 with a 127% increase. That's a solid performance, as one would expect from such an established company. Phase 2 was from March 2022 to December 2023, a period of consolidation that tested the resolve of many investors. January 2024 marked our phase 3, and since the start of the year, we've seen a 20% climb in phase 4. When should you consider buying Berkshire Hathaway? Well, Berkshire Hathaway has recovered by 15% from the declines in August and is already setting record highs. We've already started buying more of Berkshire Hathaway and adding it to the positions that have been in our portfolio since earlier this year. Breaking through $500 would be significant, as it's a major round number, and we could see the stock target $1,000 per share. Now, let's take a step back and look at the bigger picture. These 5 stocks, American Express, JP Morgan Chase, MasterCard, Progressive, and Berkshire Hathaway, represent some of the strongest players in the financial sector. They've all shown impressive growth and resilience even in the face of economic challenges. I've got 2 more stocks for you, Microsoft and Tesla, which I put head to head, but one of them trumps the other, and why we are buying up more shares for our portfolio. Click this video now to see which stock comes out on top in the battle of Musk versus Gates.